There is a single machine built in a single town in a single country, and without it, the entire artificial intelligence economy stops. Not slows down, stops. And yet, when people talk about the AI chip boom, they never mention it. They name one stock, the one that went up 114% in a single year. But that company might be the most exposed name in the entire chain. So today, we follow the money all the way down to answer one question. When AI eats every chip the world can make, who actually keeps the profit and who is just holding the risk? The answer is hiding in the filings almost no one reads. Start with the name everyone knows, NVDA. In its fiscal 2025, the company reported $130.5 billion in revenue, up 114% from the year before. Data center was about 87% of that. Gross margins near 75%. Let me put that margin in plain terms. For every $10 this company brings in, it keeps about $7.50 before operating costs. Most hardware companies would kill for half of that. These are not chip company numbers. These are software company numbers. But here is what the headlines skip. This company does not build anything. It is fabless. It designs the chip and someone else manufactures every single one. And in its own annual filing, it discloses that 3 individual customers each make up roughly 11 to 12% of total revenue. So why does that matter to you as an investor? Because the most visible winner in this story is renting its manufacturing from someone else and leaning on a tiny handful of buyers. Strip either one away, and the story changes fast. Which raises the obvious question. If it doesn't build the chips, who does? The answer is almost entirely one company, TSM, Taiwan Semiconductor. In 2025, it held roughly 72% of the entire global foundry market and, by most estimates, built around 90% of the world's most advanced chips. Full-year revenue of $122 billion, net income of $55 billion, a gross margin close to 60%. Here's why that margin is almost unheard of. Building a single advanced chip factory can cost more than $20 billion. This is one of the most expensive businesses on Earth to run, and it still keeps nearly 60 cents of every dollar as gross profit. A company only earns margins like that when its customers have nowhere else to go. But even a near monopoly carries a weakness. In its own annual filing, the company lists geopolitical, export control, and supply chain risks near the top, and North America now drives about 75% of its revenue. The same concentration that gives it power also makes it fragile. And yet, even this company, the one that builds nearly every advanced chip on the planet, can't make a single one without buying from someone above it. This is the part almost no one explains. ASML. A Dutch company most investors have never studied. They make a machine called an EUV lithography system, extreme ultraviolet. Think of it as the world's most precise printing press, except instead of printing words on paper, it prints circuits so small that thousands would fit across a single human hair. And here is the number that should stop you. This company controls effectively the entire EUV market. No other company currently produces these machines at all. In 2025, it reported 32.7 billion euros in sales, at a gross margin near 53%. So, step back and look at the whole chain. The AI company depends on the chip designer. The designer depends on the manufacturer. And the manufacturer depends on this one Dutch company for the single machine that makes all of it possible. Here's why that matters. The most famous name in this story sits at the top, in full view, but the real leverage may sit at the bottom, where almost no one is looking. The most invisible link in the chain may quietly be the most powerful. But lithography is only one step. Before and after that machine runs, other tools deposit, etch, and shape every wafer, layer by layer, hundreds of times over. That's where 2 more companies live. AMAT and LRCX. Applied Materials reported record fiscal 2025 revenue of $28.4 billion, its 6th straight year of growth. Lam Research supplies the etch and deposition tools that memory and logic makers simply can't operate without. Here's the simplest way to think about these two. In a gold rush, the people who reliably get rich aren't always the ones digging. They're the ones selling the shovels. These companies sell the shovels, and it barely matters which chip designer strikes gold. Why that matters for you is that this layer wins on the volume of the entire industry, not on the success of any single chip. But it comes with a catch, and that catch is the rest of this video. Now let's do what most channels won't. Let's argue against ourselves. Every company we just named shares one vulnerability: China. In fiscal 2025, China was 28% of Applied Materials revenue. Lam Research expects its China share to fall below 30% in 2026 as new export restrictions take hold. For ASML, China was about 33% of sales, and export rules are expected to push that toward 20%. Applied Materials has already disclosed a projected revenue hit of around $600 million in 2026 from these restrictions alone. Here's what that really means. A single policy decision, made in a government building these companies don't control, can erase hundreds of millions in revenue overnight. That is a very different kind of risk than a product simply selling badly. And valuation is its own risk. ASML has traded near a 48 times price-to-earnings multiple, a level that prices in years of near-perfect execution, with very little room for a stumble. So hold both ideas at once. The monopolies are real, and so is the concentration. One policy change, or 1 weak quarter of demand, can move every name on this list at the same time. So let's put it all on one screen. The AI chip supply chain, from the visible winner to the invisible choke point. ASML, the lithography choke point, owns the machine everything else depends on. TSM, the manufacturing giant, builds most of the world's advanced chips. NVDA, the visible winner, highest margins, highest concentration. AMAT, the equipment layer, sells the shovels. LRCX, etch and deposition, wins on industry volume, not any single chip. This is a watch list, not a recommendation. Every name here carries the China and concentration risk we just walked through. Do your own research. Here's the idea I keep coming back to. The further down the supply chain you look, the more defensible the position becomes and the less anyone talks about it. The loudest name isn't always the strongest one. So I want to hear from you. If you could only own one link in this chain for the next 10 years, the visible winner at the top or the invisible choke point at the bottom, which would you pick and why? Tell me in the comments. And in the next video, we follow the fragility one layer deeper, because underneath every company we just covered sits a materials layer so concentrated that a single disruption could crack the whole foundation. That's next. Real data, not headlines. This has been Alpha Signal.